Will mortgage rates continue to rise? Where are prices at in today's market? Where are real estate prices expected to head going into the new year? We'll cover that today in your October 2022 housing market update. What is going on, party people? Hope you have been well. In this video, we're going to answer three questions that seem to be on everybody's mind right now. Will mortgage rates continue to rise? What is going on with real estate prices, specifically in Richmond, Virginia right now, and what's expected to happen with prices going into the new year? Before we jump into those three questions, if you would like, subscribe, smash that bell so you guys get notified anytime we drop a new video, typically on a weekly basis. And thank you in advance for tuning in. So let's just jump right into it. So the first question everybody's been asking, will mortgage rates continue to rise? So if you look at the graphic over my shoulder, you will see that interest rates were on a six-week run, if I can say it, from August the 18th through September the 29th. They pretty much rose every single week, which had a lot of worried buyers asking, when are they going to stop and where are they going to stop? And a lot of this is really just due to the uncertainty and the volatility in the financial markets, which has really been the biggest impactor with mortgage rates right now. George Ratui, if I'm pronouncing that correctly, I'm probably not, the senior economist over at Realtor.com said in a quote, it says we can expect to be in the 7% in the next 3 months, but honestly, I don't even think it's going to take that long, given that we're already banging on the door of 6.5, 6.7. in some instances. So I think it's a very good reality that we're in the sevens potentially by next month. And experts are now predicting that we're going to continue to see rates rise as the Fed is trying to get a hold of inflation and wrap their arms around inflation. So the next question on everybody's mind is, what impact are these rising interest rates having on home prices? So just to diagnose what you're probably hearing on the national news cycle, and typically what you will see on the news, online and articles, are folks speaking to national statistics, or they are grabbing headlines that are specific to certain localities that it's just, it's a compelling headline to say that, home values dropped 25%. A lot of times, if you read through those articles, they're speaking about a specific marketplace, a specific state, a specific city. Realize that real estate is a local business, but let's get into kind of what you're probably hearing right now. So on a national scale, compared to Q2 of 2021, active listings are up approximately 27% year over year. And according to Showing Time, showings on a national basis are down 12.2% year over year. So there's definitely been a fluctuation. The pendulum has swung to a certain degree as far as the dynamics of supply and demand, where we're seeing supply is increasing and demand is decreasing on a national scale. And I say national with an asterisk next to it. So if we look at the statistics, though, from our local Richmond multiple listing service, if you look at the graphic over my shoulder, you will see it is painting a much different picture of what we're experiencing right here in Metro Richmond. So currently, new listings are actually down 29.6% year over year, meaning we're seeing approximately 30% less properties on the market and coming to market than we saw this time last year. Inventory of homes is actually down 19.1%. That means the amount of homes that are left over that did not sell at any given month. So that's down roughly 20%. And then Metro Richmond is actually still at 0.9 months supply of inventory as of August, which on the scale, anything below 6 months supply of inventory is considered a seller's market. So we are still very much in a seller's market. At the height of this thing, we were at 0.5 months supply of inventory. We're now at, let's call it 1 month supply of inventory, which, yes, that is doubled, but in the grand scheme of things, we're still very much in a healthy seller's market. So much so that according to Realtor.com, in a study, Richmond is actually the top 17th MSA market service area as far as the amount of appreciation that we've seen year over year in the month of September. So at 12.5% from September of 21 to September of 22, Metro Richmond came in of a couple hundred, 200-300 MSAs, market service areas that Zillow tracks. Richmond was actually number 17 for the amount of appreciation that we saw year over year. So that leads us to our third and final question: where are prices headed in 2023. So I will be the first to tell you that I cannot predict the future. If I could, I would be sitting on a beach sipping a cocktail somewhere. But, and I'm certainly not qualified to make a prediction, but what I can do for you is I can share with you what experts are saying, what very smart people that track this stuff all day long are saying about the real estate market in 2023. So if you look at the graphic over my shoulder, you will see the top 6 real estate price forecasters that everybody kind of tunes into and their predictions for 2023. As you can see, 5 of the 6 are calling for appreciation next year. Ivy Zelman of Zelman & Associates is calling for 4% depreciation last year. Now, with that being said, of course, with her kind of a more negative opinion or negative or cynical approach, she's probably going to get more of the attention in the national news cycle. But also something to note too, Ivy Zelman actually called for depreciation in 2022. So she was unfortunately wrong about that. And there is a little bit of skepticism among experts of, hey, is this a move just to get some publicity, just because we know that negative story will sell a whole lot more than the positive ones? But if you look at the average of the 6 forecasters, you're going to see that the average prediction is about 1.8% appreciation next year. So definitely a more moderate appreciation than what we've seen in the last couple of years, but still the ball is moving forward. So for anybody that owns a home, that is certainly good news for you. And another way to look at that, if we look at the Home Price Expectation Survey, which is a collection of numerous amounts of economists and their forecasts, they've kind of broken this down by different percentage brackets, percentage predictions as far as appreciation or depreciation for 2023. And as you can see, they're somewhat all over the place, but you will notice that the large percentage of these forecasters are certainly calling for appreciation in the coming year. And then one last graphic to throw at you. This is the same group of economists, the Home Price Expectation Survey, for their predictions through 2026. And as you will see, some people say that we're going to see depreciation next year. Some people say that we're going to see depreciation in 2024, or 2025 rather. But as you'll notice in the graphic, 96.8% of economists, real estate economists that comprise this home price expectation survey, say that we're going to be seeing home price appreciation between now and 2026. So it's a very real reminder that home ownership is a long-term play. It's a long-term game, and pretty much everybody is in agreement that even if we do see a small dip in prices over the next couple of years, over the trajectory of the next 4 years, we're certainly going to see home price appreciation. So what does this all mean to you? So for my sellers, I'm going to give you 3 tips. The first one is compelling is selling. And what I mean by that is the properties that we are still seeing that are doing very well are the properties that have been renovated, where the homeowners took the time, they invested in staging, they invested in getting their property ready, they're working with good agents that are doing good marketing, and they're presenting to the marketplace a compelling product. The listings that we see that are having a little bit more trouble are the listings that historically have had trouble. Maybe the properties are rough, they need work, they're not priced appropriately, they're not marketed well. And yes, over the last 2 years, those homes have done just fine. They've continued to sell, but I think we've transitioned to a market where those properties are not doing as well, some of them not even selling, just because they are not compelling. Secondly, it's a friendly reminder around this time of year that I always like to give clients that Richmond is historically seasonal in the real estate market. So what we typically see is we'll see the market kind of ramp up until we get to about April, and then April through about August tends to be the selling season where we see the most activity in our market. And then we see the market kind of taper down in activity from generally about July or August through the remainder of the year. So some of the shift that we're seeing in the real estate market is just us returning to the more kind of seasonal, cyclical market that we're used to seeing. Over the last couple of years, we didn't experience that just because they were anomaly years, but realize that part of the slowdown we're seeing right now is just simply the time of year, nothing to freak out about. And then last but not least, it is never too early to start planning if a home sale is in your future. So it makes me laugh every time, this time of year, I talk to folks that are saying, hey, we're going to be doing something in the new year. We're going to be listing in January. We're thinking about selling next spring. I always suggest, hey, let's get together. Let's kind of put together a prospective game plan. And it's, oh no, that's too far away, or we've got the holidays coming up, or we'll get up with you in the beginning of the year. And then inevitably, those same people are always the ones that are most stressed because they waited until January, February to discuss their prospective move. and then they're under the gun as far as getting their property ready, or there's only so much they can do to get their property ready for market, to make sure that they get the highest price because they gave themselves such a limited amount of time to get their home ready. So if you are somebody that is thinking about selling your home next year, absolutely recommend that you speak with a competent agent. But sit down, put together a game plan, get some input as far as things that can be done to get your property ready for market, and then you can comfortably do these things over the next 2, 4, 6 months, as opposed to trying to do it over 2, 4, 6 weeks, which unfortunately is generally not enough time and is going to be a stressful event for you. For my buyers, I've got 3 tips for you guys as well. First and foremost, homeownership is a long-term play. So as we went through in the market update, there might be some price depreciation, who knows, over the next couple of years, but long-term, or not even long-term, but over the next 4 years, the majority of experts are saying that we are going to see appreciation. So just realize that if you are buying a home, I would at least think through it on at least a 5-year time horizon. I wouldn't buy a home that you're expecting to be in for less than 5 years, because you simply just don't know with the volatility of the market where things are going to go. But if you look at this over the horizon of 5, 10, 15 years, generally speaking, homeowners tend to do pretty well as far as appreciation goes. So just, don't get caught up in the noise of what's going to happen with prices in the next year or two. I would hope if you're buying a home, you're thinking in 5 and 10 year time horizons. Secondly, the interest on your rent payment is 100%. So we've had a lot of buyers that have been complaining about interest rates, and look, I get it. Interest rates are higher than they were, a year ago. You're seeing higher mortgage payments given those interest rates, and home prices haven't really declined in a significant amount, or really any in certain pockets. But you really got to think through, hey, what's the alternative here? And the alternative here is renting. By the way, rents have continued to increase. You've probably felt that if you're renting a property right now. And realize that when you're renting, 100% of that payment is going towards interest, whereas when you're buying a home, only a portion of that is going towards interest. So you're going to be paying interest either way. It's really just how much do you want to pay. And when you're renting a property, pretty much all that money is getting thrown down the tubes. And then last but not least, consider a rate buy down. So a lot of good mortgage lenders right now have products where you can buy down the rate if that's something that's important to you, or if you want to get into a lower mortgage payment. And depending on what kind of listings that you're going after, you might be able to negotiate with the seller, where the seller gives you money towards your closing costs, which can then be used to buy down your rate. So that is an alternative for you. You can either buy down the rate for the whole duration of the 30-year term, or there's other products where you can buy down the rate for the first couple of years. And I think the play there is, if you think rates are going to go down, you could potentially refinance at some point in the future, but it's an option there for you. So hope you guys found that useful. Thank you for tuning in. If you have a questions, concern, if there's anything else I can do for you, throw it in the comments. Appreciate you tuning in. We'll see you next month.